Well, the Wall Street ended Friday in the red, but for the week, the sensex and the nifty were quite muted, lukewarm, if you'd want to call it that. Now we've seen the broader markets underperform as well, with most sectoral indices ending in the red. On today's edition of the Editors Roundtable, we take stock of the third quarter earnings season, the big downgrades that came in, and we put spotlight on the auto stocks. We decode the Minda Pricol deal. So we're going to talk about lots. I'm Sonia Shanoy. With me, I have my editors Prashant, Nigel, Nimesh. Folks, it was an interesting week. Of course, this 18,000 level has become a bit of a pivot point, bit of a hurdle for the market, but largely so much corporate action happening this week.
Oh, absolutely, and earnings are behind us now. Yeah. I think that's a good thing.
That's finally a relief.
He was sigh of relief, but earnings have not gone in the right direction, right? Yeah. I think that is a worry, really. Let's actually quickly run our viewers through, a couple of points which basically help, get us a sense of what's happening right now. The mood is actually pretty somber out there, and I think it's been that way for the last couple of weeks, since the budget actually, and no clear sense of direction, and unable to break out of the range as well. So those are the three things which kind of define the market mood. Both local and global cues are also largely unsupportive, and I'll get to both. So earnings is the number one thing. So if you take a broad basket of, say, the NSE 500 companies, X of financials, right? Companies have seen X financials, and that's the bulk of it. They've seen profits drop 12% on a year-on-year basis. This is broad-based data, and I and Nigel will put more data to this effect a little later. In terms of the global stuff, right? I mean, it's confusing. Data is all good, but is that meant to be good for markets also, or is meant to be bad for the markets also? And there the conclusion is flipping. Sometimes it's good, sometimes it's bad. And that's why I'm saying it's a bit confusing. So let's take the help of what prices are doing really. So US yields have run up quite a bit, right? I mean, about 50 basis points in the last 6 or 7 trading sessions. I'm talking about the 10-year. The dollar is the dollar index, a broad measure, is back at 104, which means it's now erased all of its losses this year. It's come back very, very strongly. So just two things. On the S&P 500, on Thursday, we saw a close below 4,100. 4,100 is a key support level. It's a bit of a battleground area. A weekly close, which is this today, Friday session, a weekly close under it, I think will get a lot of people to wonder whether downsides are opening up. The 10-year, as I said, has already surged quite a bit, but I think if it breaches 3.9 on the upside, it would suggest a return to the high of 4.33 from where we saw a massive fall. It's not very far, by the way. Here in India, the Nifty is basically, after Friday, fallen back in that range. The range is that budget day candle, right? I mean, the high was almost 18,000, the low was 17,350 or so, and we are back within that range once again. Bank Nifty never managed to break out of this range like the Nifty, and that remains kind of range bound. For the 12th session, the Bank Nifty is spent in that 1st of February candle that we saw. It was a very large candle, of course, very large volatile moves, but that's what we've seen both on the Nifty and the Bank Nifty. But Nimesh, you pick up a lot of stuff with your conversations. What's the latest?
Actually, I'm not too disappointed with this week's market. If you look at the market, we've been consolidating with a very narrow range. But the good part is there is leadership back in the markets now. So Reliance has helped the bulls, ITC helped, and finally we saw some moves in the technology stocks as well. So there is clear leadership. That's part one. The other part is at the margin, the FIs have turned net buyers for India. Even if you exclude the large block deals, effectively they were net buyers in the cash market, and that was a positive sign according to me. The other important thing, since we had a lot of conferences this week in India, and there was a lot of chatter from the larger FIs as well, the broader context is India's premium valuation is now narrowed to China for two reasons. One, India has underperformed, and China has seen a big outperform in the last 6-8 months. So now the valuation premium is at a 10-year average, which is not bad, which means that the tactical trade of India to China is now largely over. That was a key takeaway when I spoke to some large FIs who came to India this week. So that's on the positive side. The supply overhang is going to be a key thing to watch out for. We saw this week large block deals, Coforge 10% equity changing hands, Interglobe 4% equity changing hands, and the overall feedback is that trend is likely to continue. So I'm expecting more block deals coming in next week as well. So that's something need to track on. But as I said, given the global perspective, India is relatively better this week. The other niggling factor apart from supply was the fact that the new margins which came into effect from this week that is impacting a lot of activity from HNIs and retail investors. That's the overall feedback. I spoke to a lot of brokers as well. So that, I guess, will take some time to stabilize. So that's something to watch out for. But at the margin, the FIs have 10 buyers, and the fact that India has relatively been in that range is not bad, so to speak, given the global perspective. So that way, I'm saying it's not been a bad week for India.
The froth has been taken off, right? I mean,
Yeah.
So maybe a little bit more, but the large excesses have been taken off. Let me just, guys, run through the earnings, right? The earnings downgrades which have happened. Let me go across to the big wall as we were talking, and I think it'll help kind of set the context for this conversation. So, there have been earnings downgrades galore, as the title suggests. And just for the purpose of, to explain what we've done is we've taken what earnings expectations for FY24 were 1 month back before the earnings season started and how they've moved as earnings have come through. So earnings 1 month back and earnings now, right? And these are estimates because what markets focus on is earnings surprises or disappointments incrementally. I'll start with the Nifty 50. In the case of Nifty 50, 56% of the companies have seen earnings downgrades. That is 28 companies. 5 companies have seen no change. 6 companies have seen very small change, minor upgrades between 0 and 1%. And 11 companies have seen upgrades. 11 is what? 22% have seen upgrades. So 56% have seen downgrades and 22% have seen upgrades. Now let's quickly tell you where are the upgrades and downgrades falling. I'll start with upgrades, smaller list, banks and financial services, as you can see, some FMCG and auto, Bajaj Auto there. Where are the downgrades? As you can see, it's widespread actually. Divi's Laboratories, Tata Steel, Kotak Bank, Bharti and Apollo Hospitals. This is all, by the way, Bloomberg best consensus data that we are putting out. So it kind of averages out all the extremes. So these are the downgrades on the biggest downgrades on the Nifty companies. Let's now expand the horizon and basket to NSE 200, right? So you can say this will include some of the best top mid caps, etc. as well. So in the NSE 200 list, we've seen downgrades for 57% of the companies. That's 113 out of 200 companies have seen downgrades. 9 have seen no change. Under 1% upgrades are 19 companies, so as good as nothing. And upgrades from 59 companies, not from, but market has upgraded estimates for 59 companies. That is about what, 30%. So 57% have seen downgrades, 30% have seen upgrades in a wider basket. Again, let's just tell you where the biggest upgrades and downgrades are. LIC, Bank of India, PSU banks and financials is a theme that you will see quite a bit. Bank of India, Canara Bank, IDFC First and Bajaj Finserv. Actually, this is all financial services where we have seen, at least on the first plate, upgrades from. And then you also seen upgrades from Torrent Power, Tata Power, Petronet LNG and Indian Hotels, so as to speak. Now come to downgrades where the list actually is long and it's quite interesting as well. And I've kind of tried to bucket this into themes, right? So the new age companies, Zomato, Nykaa, you can see the downgrades for FY24 estimates, 24 and 23%. Consumer durables, Crompton, Whirlpool, big downgrades. Dixon, of course, is the poster boy for PLI, manufacturing, etc. That's seen a 15% downgrade. The consumer names, right? High P consumer names. You look at this. ABFRL, Page Industries, United Breweries, Info Ed, Jubilant Foodworks, all 10% and more in terms of downgrades. And then Pharma, Divi's, Laurus, Gland Pharma, Lupin have also seen their earnings expectations move lower. Metals, so some repetition, Tata Steel I mentioned earlier, SAIL, industrial company like Linde India down 12% to FY24 earnings, and Indus Tower, Bandhan Bank and Z are some of the others which have also seen earnings getting pulled back. To put a comprehensive picture, I zoomed out more. So this is, we talked about Nifty 50, Nifty 200, top 200. This is NSE 500, right? The widest basket. And you can take a look at what's happened here. For non-BFSI companies, that is 422 out of 500 companies, profits are down about 12% on a year-on-year basis. But let's get this number for the Nifty as well. And Nigel has that data, so let me toss it across to him in terms of how expectations have moved there. Nigel, over to you.
Okay, all right. Prashant, let's talk about, Motilal Oswal note. And they have termed this past earnings as a modest quarter because, autos did pretty well. the cyclicals didn't do too well. So let's give you a couple of numbers out there. Now, for the Nifty itself, well, the earnings growth for the past quarter was around 11%. Motilal is working with a growth of close to around 14%. So in that sense, it missed estimates by a little bit. But for the 9 months, well, we've had pretty strong mid-teens growth is what we've seen on a year-on-year basis. And the profitability, why did it moderate in quarter 3? Because banks, financials, they fired, autos did pretty well, and some of these metal stocks, well, they underperformed. Also, there was a broad-based slowdown that was seen in consumption. Whether it was staples, whether it was discretionary, both of them were a bit of a pain point. Now, the BFSI space, that did very, very well. And ex of BFSI, actually, there was a larger than expected decline. Because the decline ex of BFSI is to the tune of close to around 14%. They were plugging in a decline of close to around 3%. So that clearly hurt. Now, what does this do to the Nifty EPS? Well, for FY23, they have scaled it back by close to around 1%, not too much out there, scaling it back to 812 rupees from around 820 rupees odd. But they're keeping their targets for FY24 intact. That would mean it's a taller ask. In FY24, you'll need to see a bigger growth out there. And the EPS estimates they're working for FY24 is close to around 990 rupees odd. So we've got a tall ask actually from here on because the base as well is higher. But let's see how this one goes.
Okay, well, you know what? This is, of course, the big theme, right? The earnings downgrades and the bit of disappointment that we've had. Let's go across to our guest, Prashant Khemka, the founder of White Oak Capital Management, is joining in. Prashant, welcome to the show. What are your own thoughts on how earnings season has panned out? Do you see more downgrades and upgrades? And if yes, what are the kind of sectors that you continue to be bullish on post the earnings season?
Hi, Sonia. Thanks for having me here on this panel. Thanks for the question. So I think as the chart or the data just showed, yes, a lot of companies outside of BFSI had very robust results, but outside of BFSI, there were, in this quarter, a couple of things going on. See, inflation in raw materials has been coming down, but a lot of the companies had higher priced inventory, raw material, which were bought in earlier quarters, which they're working through now. But in their end pricing, they have to reflect what is more in line with current raw material prices. Yeah. So the prices are lower, but RM prices that they're using from the inventory are still higher, and hence there is a margin compression, but that is a one-off margin compression. That's what the companies are saying as well, and it should normalize for most of them some point during this fourth quarter, or for some companies in the first quarter of next fiscal year. So that's been one of the key reasons for lower earnings for many of these companies. The other reason, more fundamental, yes, there has been it seems some slack in consumer demand. And that's across urban areas as well as rural areas, but maybe a little bit more at the more economy end or the value end. Because the impact of inflationary pressure is felt more at that economy or the value end of the curve. So for those two reasons, earnings have been softer for different market corporates in the market.
Okay, well, stay on, Prashant. We'll come back to you. There was another big story this week, and it's a deal that we told you was in the works, and it finally happened this week. Auto component major Minda Corp acquired about 15.7% stake in its rival Pricol. Remember, CNBC-TV18 had reported earlier in the week that Minda was on the prowl for a stake in Pricol through a reverse book building exercise, and that happened. Nimesh, you were the one to tell us. But, so much to and fro. We thought it would be a takeover battle. Yeah. Finally, it's just a, financial stake. But tell us a lot more about what you found out.
Well, Sona, it's too early to say it's final. This is just the first step, according to me. So in the first step, Minda has acquired 15.7% in rival Pricol. They've paid 400 crore rupees. So I guess even the Minda investors are going to ask the management on what is the rationale behind it, spending 400 crores for a minority 15% stake in a rival company. So that's something we need to see further. In fact, Minda has gone on record saying that this is just a financial investment and they should be treated as normal investors, what the other shareholders are. But I guess there is a road ahead for this deal, so to speak. And that's what we'll have to track very closely. I was looking at the shareholding pattern of both these companies, Pricol and Minda Corp. In Pricol, the promoter holding is very low at just 36%. So that's going to be a big risk for the Pricol promoters. The mutual fund holding is 4%. FI owns close to 12%. And there is a private equity investor who owns 5.7%, which is PHI Capital. And interestingly, that same fund owns 5% in Minda Corp as well. The disclosure will be important as to who are the large funds who participated in today's reverse book building and given 15% stake to Minda Corp. The next step could be whether they will go and talk to Pricol promoters and ask to buy them out, and whether there will be an open offer as well. So that's the second step to watch out for. I guess it's going to be, this is just a start, is what I understand. Need to see how things pan out. But I guess, Sonia, you've tracked the sector so well. What are the key synergies that benefits? Because I was looking at the balance sheet of Minda Corp as well. I think they've spent most of the cash that they had in today's 400 crores.
Yes.
But the fact is, for a 2,400 crore market cap, even if you reach to 51%, they need 1,200 crores. Do they have enough cash to fund this and take this over?
In fact, on their books, Minda Corp has just a little over 300 crores, which is hard cash on their books. And as you said, that's not even enough to fund it.
True.
But give and take everything, I guess, from the accruals that came in Q3, etc., they would have made that amount available. But I think it's a strategic fit for them. Eventually, whatever they plan to do with Pricol, whether it's a hostile takeover, whether a complete acquisition, Pricol is a very strong company in, these instrument clusters, which are the various displays and indicators that are used in a car. And Pricol is the second largest global player in this instrument cluster space. They also provide fuel level sensors for 2- and 3-wheelers. So it's a very strong business. In the 9 months period, the earnings have also picked up quite a bit. It's a debt-free company. Not just that, they have a 50% market share in 2-wheelers. They have a 70% market share in commercial vehicles. They also do various things for electric vehicles. They provide connected vehicle solutions, telematics, onboard navigation. And as we know, this is a space that the Minda Group is very aggressive in this whole EV space. Not just Minda Corp, Uno Minda as well. So in that context, it's a strategic fit for them. Now, there are, of course, many positives. Pricol has free cash flow of about 100 odd crores. So in a sense, this is a strategic fit
but
for
what could
Minda.
be the merged entity look like? I mean, if they combine together, eventually if that happens, what could be the merged entity look like, and what could be the key benefits for someone like a Minda?
So, as I said, Minda is already available. They already provide instrument clusters. Now, Pricol will be adding, of course, their own geographic as well as domestic reach to Minda Corp. And the combined entity will look much better. It is anyways a cleaner balance sheet. Sure. But, I wanted to just toss this question to Prashant Khemka as well. Prashant, I don't know if you've tracked this deal that has happened, but in general, how are you feeling about auto ancillaries? The guys that have a global exposure are finding it a bit challenging, but the domestic piece is looking very strong. Your thoughts?
Certainly, it's hard for me to comment on individual companies, as you know, and I have, to be very honest, not followed these very closely, this specific deal, to be able to comment. But you are right, because of the challenges in a lot of the auto anchs companies do export to Europe. And as you might know, some of the companies who reported over the last few days have called out the weakness in European demand, particularly. There is some destocking going on as well. So there are several undercurrents. One, the demand itself is a bit weaker. Secondly, the channel is destocking in Europe because the uncertainty around RM prices, raw material prices, and availability due to supply chain disruptions, both of them are reduced compared to 3 to 6 months ago. So 3 to 6 months ago, you had channel building inventory in, let's take Europe as an example. So now the end demand is somewhat softer, but importantly also the channel is destocking to normalize the inventory, which is resulting in weaker demand for the Indian suppliers.
Guys, when is the last time you heard a hostile takeover? You guys remember? Which was the last time? When you guys were talking about hostile, I mean this.
Oh, hostile.
Not a friendly
Again,
one.
I think it's too premature to say it's going to be hostile. Let's see. This is just the first step. Whether they move ahead, whether Pricol agrees for it, don't agree for it, whether they give up. There are too many moving parts.
When was the last time there was a hostile takeover?
I don't think India has seen any hostile takeover, so to speak.
I mean, hints of it, right? Adani, NDTV, for example, was one maybe. L&T Mindtree, but that is some time ago. Which also had hints of it, not like the US, of course, where it is very brazen. But as a journalist, I mean, this is interesting stuff, right?
Interesting, absolutely. Takeover battle, right?
Okay, we'll take a quick break here, and we'll focus on the auto sector, which seems to be in top gear. The big gainers there, and how they fared. Prashant Khemka is with us as well, so all of that in just a bit when we return.
Invest once and enjoy guaranteed maturity.